How to catch the real shift between mean reversion and trending markets. Okay, so what this guy is asking is when the market conditions for a coin are currently mean reverting or range bound, how can we tell that it's about to switch and get into a very trending environment, either huge uptrend or huge downtrend? Great question. And it's a tricky one to answer, but I'm going to do the best that I can with this one. And the first thing that I need to do is I need to remove the word real and I need to switch it for potential. And the reason why is because we can never really know when the conditions are shifting from mean reversion to trending. We can only guess and use hints. So at best, we're working with potential shift, because this means that sometimes when we guess that the conditions are going to change, we are correct. Other times, we are wrong. So sometimes we're right, sometimes we're wrong. But as we get better, we start getting it right rather than wrong. A little bit more than slightly more. And by slightly more, I mean, let's say you're right 50-50, and then over time you're right like 52-48. That's really all you need. That small 2%, that small 2% edge, right? It's called an edge because it literally is something minuscule, right? That's all that's required to give yourself an edge and advantage. Okay, so it's sometimes we're right, sometimes we're wrong. Okay, now that I got that out of the way, I want to introduce a concept called relative change. So imagine that we have a trending environment. Now, and let's pretend that it's been trending for, let's say, 20 hours straight. And then suddenly, for 5 minutes, it goes sideways. Does that mean the conditions have changed? Well, this could have just been coincidentally a 5-minute window of time where, just by pure luck, the majority of people in the USA just so happened to take a bathroom break. Just coincidentally, like pure coincidence. And because they literally weren't in front of the screen, there was less volume. And because there was less volume, the price action went sideways for 5 minutes. Does it really mean that the conditions have changed? No, not necessarily. This could have just been a small blip. Okay, well, what about 10 minutes? Does that mean the conditions have changed? Well, not quite. It could just be 10 minutes of range-bound price action. All right. What about if we had another 20 hours of ranging sideways price action? Then could we say that the conditions have changed? Well, then it's a lot easier to say, well, yeah, duh, of course. It's been ranging for the past 20 hours. I think the conditions have changed. Now, regardless of where you said, yes, I think the conditions have changed, here's something that's really important to understand. That the conditions actually changed at this moment in time, here. But then, after some lag, we realize, or we have the assumption, that I think the conditions have changed. So I'm just going to use different colors to make it easier to visualize. Maybe I'll use green for this one. And I'll use, what color should I use? Is yellow? Oh, yellow is not visible. I'll try again. Dark blue. Okay, dark blue. Okay, so remember, this is the point where the conditions actually changed. And then all of the other points are just the assumption that something has changed. So first, something has to change in the conditions. Then after something changes, we must recognize the fact that something is changing. And then we make some kind of assumption about whether or not something has changed. And I don't like to think in terms of binaries. I like to think in terms of continuums. So it's not that something has changed or not changed, because if you really think about it, the market is always changing in every single moment of time, right? In every single millisecond or nanosecond, the market is in an infinitely unique state that it was never in before, since the dawn of time. It's always in a new state. So therefore, change is always occurring, infinitely occurring at all moments of time in the market conditions. So it's not whether change is occurring or it isn't, because we have, like, it's undeniably clear that it's always happening. So that part doesn't matter. What matters is how much change is occurring. Because if very little change is occurring in the market conditions, then it would make sense to make your next trading decision based on the idea or the assumption that nothing has changed. So if it's currently trending and you assume that nothing is changing, and you assume that in the next 1 or 2 hours nothing will change, then it would make sense to bet for continuation, for more momentum, right? But if something is very different and you want to bet that something has changed, then we're doing something completely different. We are not going to be betting in the same way, because we're looking back and we're finding this point, like after a certain amount of price action has passed. I would say, at least, me personally, I need at least 2 hours to really take a look at the price action and determine that it's behaving differently. But I would say this does not look anything like that. This looks very different to this. Therefore, I'm not going to make the same decision compared to, let's say this is the present moment. So I would say, okay, I'm reviewing this price action and I'm comparing it to that price action. Is it different? Not really. It looks very similar. Therefore, I'm going to my next trade is going to be identical or very similar to that how I would like to have traded during this period of time. So change is relative, rather, like, I like to think of changes in market conditions in terms of relative change, rather than it did, like in a binary sense, like, oh, that it did change or it didn't change. So that's the first thing. The next thing is, and this is what I was trying to allude to, is how much change. So example, let's pretend that we're only looking at one thing at a time. Actually, just whenever I'm talking about relative change in general, I'm only looking at one variable at a time, because I'm trying to assess how much did this one thing change, or how different does this one thing look right now compared to what it was before. If it looks very different, cool, we probably have a very big change in the conditions. If it looks very similar to what it was doing before, then there's probably very little change. If there's very little change, I don't need to change the way that I'm trading. If there's a lot of change, I need to do a drastic change in my approach to trading this market condition. Okay, so example, imagine that I'm looking at the volume. And let's pretend that the volume over a certain window of time, let's say for 10 hours straight, it is basically flat. And then suddenly, at this moment in time, it starts to increase. Now, after like 5 minutes of this, I might just say, okay, this is just a small blip. How much change has occurred? So let's just pretend that this is this is like no change at all. On the right-hand side, we have, let me just delete some of this. There we go. On the right-hand side, we have, this is heavily, like the way that the conditions are changing are heavily favored towards momentum. And on the left-hand side, let's say it's more favored towards mean reversion. So if we start increasing like this, just for 5 minutes straight, only 5 minutes, it like moves a smidgen, like a tiny little smidgen to the right-hand side. And let's say this is like the absolute zero, where it's not favored for momentum or mean reversion. So the way that the volume looks right now, after 5 minutes of this, it like slightly moves towards momentum. And then if we were to wait it out for 2 hours, and it still is increasing, okay, awesome. This is a very big change compared to what it was doing before. Like, this doesn't really look that different to what was happening on the left, but this looks very different to what was happening on the left. If I was to try to quantify this, or quote unquote operationalize this, like how do we systematize this process? Because right now I'm just talking mumbo jumbo, everything is subjective, right? Oh, this looks different to that. Okay, but what does that actually mean? So if we were to, like an example of this is, what is the current volume now? What was the volume 2 hours ago? Or let's say 4 hours ago. Let's say this point is X. Let's say this point is Y. If we do X divided by Y, what does that number equal? We'll just call it N, right? Let's just call this N. And then again, we do that at a different point in time. So we do, what is the current volume now? What is the current volume several hours ago? Right, so this is X, this is Y. We do X divided by Y equals, we'll write, this is N1. This is N2. 1, 1. X1, Y1, N1. X2, oh my, there we go. This is Y2, X2, there we go, now I'm getting it right. So X2 divided by Y2 equals N2. So then we do, okay, what is N2 divided by N1? And the greater that, basically, if this equals 1, this means that there is no change that is occurring, or very little change that is occurring. The closer that this number, whatever this equals to, this is trying to measure how much change is there actually occurring within the volume. So if this happens to equal 1, it means that there is basically no change, because during this window of time, it equaled this, like if I was to divide the volume here by the volume there, if this equals 1, cool. If the volume here is pretty much the same, it also equals 1. If it's increasing by a certain rate, let's say the volume here is 200K, the volume here is 100K. What is the volume here divided by here? It's 2, right? So this regime, we'll just call it 2. So N1 equals 2. Let's pretend let's pretend that this look back window is like 2 hours. And now this is the present moment. Volume is 1 million. Volume here 2 hours ago is 500K. If we were to take this value, divide it by this, what do we get? We also get 2. So that means N2 equals 2. So if we do N2 divided by N1, what do we get? We get 1. So if this equals 1, that means that the rate of change, or how much the volume is changing, is not really that much. Like whatever is happening in, like however the volume is moving during this window of time compared to this window of time, it's doing the same thing. Like whatever was happening is still happening. And because whatever was happening is still happening, it's a lot easier to take a bet that, okay, well, since nothing has changed, I'm just going to take a bet that, again, in the future, nothing will change. So we can go in, so this is nice for momentum. But imagine we had a different situation where it looks something like this. So the volume was increasing, and then it starts flattening out. What happens then? So here, the volume is 500K. 2 hours ago, it was also 500K. If we take this number divided by that number, what do we get? We get 1. So N2 equals 1. So if we do N2 divided by N1, what do we get? We get 0.5. So now we're basically seeing that, oh, interesting. The way that the volume is behaving is now a lot different to the way that it was behaving before, because now this number is starting to move away from 1. Now, if we take the third most extreme example, okay, most extreme example, where it's decreasing like this, if we do this number divided by that number, what do we get? We get 0.5. So N2 equals 0.5. Let me just draw this out. So N2 equals 0.5. So if we do 0.5 divided by 2, what do we get? We get 4, right? We get 4. So this is very different to 1, right? It's very far away from 1. And because the distance from 4 is very, very far away from 1, what this tells us is that whatever is happening in the volume during this period of time, so this is heavily decreasing, and this is heavily increasing, whatever is happening, I'll just use a different color. It's going to make my life easier. This is very different to this. Decreasing, increasing. So we can operationalize it. Like, we can get systematic with it and attach some numbers to it and like clearly define what is the actual rate of change. But like, if you don't want to get into the nitty gritty, or like if you're still watching at this point, but I've lost you, what I'm trying to say, what I'm really trying to say is that, or what will be helpful is to at first accept the reality that sometimes you're going to be wrong when you try to determine whether or not the conditions have changed or not. So that's point number one. Point number two is that it really matters to what extent something is changing. And when you first start off, you might not understand how to quantify it or how to systematize it. That's fine. That's totally fine. Just use your eye, right? And in the very beginning, you might just have to use your eye and say, you know what? This price action looks very different to that price action. Therefore, I think something is changing. And that you might just roll with that. You're just using your gut feel to determine that whatever is going on right now looks very different to what was happening before. Or whatever is going on, I'll use a different color. Whatever is going on right now looks very similar to what was happening before. Therefore, nothing has changed, right? So you start with using your discretion. But as you progress in your level of skill and you want to start quantifying stuff, you want to get really systematic with stuff, you absolutely can take it to the next level and start measuring rate of change or trying to measure relative change. And the way that you do that is you have to slice some price action, take a slice of the price action. Okay, so we're working with this slice, and then compare it to another slice of the price action. And we ask the question, what is the difference between this price action and that price action? Or what is the difference in something here compared to there? So you could be asking, what is the difference in the volume? And there we just look at two numbers. You could be asking, what is the difference in slope, right? So if, for example, because it's very hard to just say, oh, well, what's the difference in price action? Like, what is something that can be defined numerically? So an example of something in the price action that can be defined numerically with a number is the slope. So for example, what is the starting point? What is the end point, right? There is some slope here. Let's say this is 45 degrees, and let's pretend that this slope is 30 degrees. So there is something changing, right? But if this was like 44 degrees and this is 45, the amount of change that has occurred in the slope of the move is very low, right? Therefore, we should not assume that big of a change. So then the next question you might be thinking is like, okay, well, change in what specifically? Should I be looking at the slope too? Should I be looking at the volume? Should I be looking at what are the relative, what are the adjustable Sharpe ratios of this? Like, what am I supposed to be looking at? Now, there is no objective correct answer to this question. It all just depends. It all depends. Sorry to break it to you. It depends because it depends on, like, specifically what strategy are you using? What exactly are you using to enter a trade and to exit a trade? And what specifically would you like to collect more data on to deepen your understanding? So it depends on a whole bunch of stuff. What is actually the best variable to track? But if you wanted one, just for the sake of having one to think about, I would at least start with the volume, because this is the easiest one to review, at least. To review or to quantify or to at least start playing around with this topic. But yeah, this is a challenging question, and I'm glad that you asked me. Right now in this exact moment of time, I don't have video content talking about this topic because it is an in-depth and it's quite a lengthy and it's a really tricky one. It's a really, really tricky topic. But yeah, in the future, I absolutely will have more and more video content on this exact topic. But for now, I hope that this my response to this will do. But I just want to, before I wrap up with this question, I want to cover something. So if we go back to here, like this is where the conditions have changed, but first the conditions have changed, then some lag happens, and then you realize that the condition has changed. So basically, the more skilled of a trader you become, the less lag you will experience when trying to make the assumption that the condition has in fact changed, right? Because if your level of skill is low, it might take you 20 hours to realize that we are now in a mean reverting market environment, and now is the time to start trading mean reversion. So you have less juice left to squeeze out of this regime. But if you manage to pick up on this after just 5 minutes, you might have like some insanely really good signal to determine that something has changed. Then awesome, you get to squeeze out all of this 20 hours of non-stop ranging until you determine that the condition has changed once again, right? So the more skilled you are is going to be correlated with how fast you'll be able to determine, or how much lag you have, how little lag you have to determine that something has changed. Actually, you know what? While we're here, I'll give you another tip. This one is quite helpful. This is specific for momentum. So if we have, actually it applies to mean reversion as well. So I'll give the momentum example. So I'll start with the momentum one. So imagine we have a staircase, a very strong trend. And throughout this trend, price is breaking every single resistance level on the first attempt, the first or the second attempt, quite cleanly, right? Easy peasy. It's breaking through every single resistance level that you could possibly find. And then suddenly it tags a new resistance. It fails. Okay, it could have just been an unlucky outlier. Tags the same resistance, rejects and fails. Tags the same resistance, rejects and fails. If you've got 3 rejections or more at the same level, right? Whatever was happening is very different to what was happening in the past, which is the number of times that price has tagged a level. Because if we look at, let's say, the past n number of hours in price action, let's just work with me here, because I have to pull numbers out of thin air. But let's pretend that we're looking at the past 2 hours of price action, and the variable that we're measuring for rate of change is the number of times that price has rejected the most relevant swing high. So what is it here? It's 0. What is it here? It's 0. What is it here? It's 0, because there are no rejections that are occurring. It's breaking through the level first time round. Here, in this 2 hour segment, it's 0. In this 2 hour segment, it's 0. And then suddenly, it's 3. Right? Suddenly, it's 3. So at this point, I'll just draw a thicker line. So here is where we can take this slice of price action, and we compare it to the left-hand side, and we can say, okay, this looks very different to this. And if we go like full nerd out with it, well, we can say, well, 3 divided by 0 equals infinity. Therefore, whatever is happening is very different. Or actually, that might complicate things if we just say, how many times has price touched a resistance level on the 1 minute time frame in the previous 2 hours? So this would be 1, 1, 1, 1, 1. Okay, all of those values are 1. So if we do n2 divided by, where is it? n2 divided by n1, this would equal 3, because we have 3 touches, and in all of the other sections we have 1. So therefore, a very big change is occurring, and since a very big change is occurring, we probably should not look to trade more momentum. Of course, what can happen is sometimes it turns out that this was just a blip, and we keep ranging and pushing higher. Sometimes this ends up turning into a wild range, and other times this was just distribution and price completely sells off. But the point is that I have noticed that if we have a really clean trend and then we have three failed attempts at breaking the same level, I just let it go. I don't bet on this. I just abandon the idea, okay? And I start leaning more towards, in terms of preparing myself to trade mean reversion, because this, whatever this is, this looks like a range, right? This looks like the start of choppy price action, the very beginning of choppy price action. So I'm preparing myself to maybe start looking for mean reversion. Now, the same concept applies in the opposite fashion as well. So imagine we have a crazy choppy range where it is ranging non-stop. And then suddenly it starts trending. So at what point would I call it no longer a range? I would call it no longer a range if we have 2 hours, at least 2 hours of a clean looking staircase, right? So if we have 2 hours of a really nice version of the opposite regime that was happening, that's when I would determine that something, whatever was happening, is no longer happening, and therefore how I should trade this price action should be very different to how I would have liked to trade this price action. Okay, so for momentum, if we have 2 hours of non-stop range, or if we have three or more failed rejections at a level, I'm not going to look towards momentum. I will look more towards mean reversion. Okay, I think I can sum it up there, or I think I can wrap up this specific question at this point, because I can feel myself rambling. But yeah, I'll try to quickly sum it up. So there is no real shift. There's potential shift. This means we're going to be right and wrong sometimes. After the conditions change, first there is a window of lag that must occur, and after some time passes, we realize that the conditions have changed, and how good you are will determine how much lag you have. So in the beginning, this might take you a really long amount of time to realize that whatever was happening is no longer happening. The better you are, the shorter this window of time will be. But we can never really get it down to zero. But we can bring the lag down as close, like our goal as traders is to bring our lag down to as close to zero as possible, because the closer it is to zero, the more we'll be able to squeeze out of the new regime. So there's that. And two things to immediately look at is how are the most recent 2 hours of volume behaving, or what are the most recent 2 hours of price action behaving like? 3 or more touches is a danger sign in a momentum environment, or 2 hours of staircasing is very dangerous to see if you're currently in a mean reversion environment. Okay, now I think I've covered it. I've tried to do my best to sum that up. But yeah, I will say this. This is a complicated topic, and I absolutely will have more video content around this area in the future. Okay, thanks for watching.